Well, g'day there, traders and friends, market participants right around the world. You are here once again with James on behalf of Pivot Point Trading as I sit down and bring you this Tuesday afternoon market and individual stock update. Now, the markets were relatively flat, relatively unchanged. The Dow closed up just over 46 points. The S&P 500 was up over 6.5 points, and the Nasdaq up 26 points. Of the three, this was relatively the strongest. The reason why is because for the first time we are beginning to break above these two little swing highs which we have put in for the month of August. So the Nasdaq in ways are leading or is potentially leading the Dow Jones Industrial Average and the S&P 500. The reason why it is leading is because the Dow is nowhere near its relative high from the month of August, nor is the S&P 500. And again, we've got some shooting stars and upper wicks to overcome. We are getting closer to it, around that 2190 area. We closed at 2186, so it'll be very interesting given today's trading session to see what happens for the remainder of the shortened trading week, Wednesday through Friday. Obviously on Monday, the markets were closed in observance of that Labor Day public holiday in the US. Now, this is what is, I guess, bringing me into two particular stocks. So in our top 12 individual trade list, two stocks went absolutely berserk today, one of which we are in, the other, from personal experience and in full transparency, I missed out on. I'll start with Amazon because we have been in this stock for a number of weeks now, roughly 2 weeks as we went through this little pullback. Original entry, 771.61. Now we saw the little pullback, we saw the bounce, we started to adjust our stop, and now I can confidently bring this all the way up to about 769. Today, we closed up very close to $16.50. We closed at 788.87. A long day, Morobozu candlestick on some decent volume as well. So I wasn't expecting this on Amazon. I really was expecting a relatively flat week for this shortened trading week. Low volatility, probably, or at least the possibility of low volume. But in Amazon and also Bidu, we've seen some exceptionally rare long day Morobozu bullish candlesticks, which are continuing that trend. And if I bring up the exponential moving averages, you can see the trend is still continuing. We are holding above the 20. We are also holding above that long-term 50 EMA as well. So relatively healthy across the board for Amazon. It is really nice when you get a day like this. I completely and utterly was not expecting this, but I mean, it's just fantastic to see that we're building a lot of intrinsic value into those call options for Amazon. Now, the stock which I missed out on this week was Bidu, or at least this particular trading session was Bidu. If we cast our mind back to Friday, Bidu closed at what was it? The closing price for Bidu on Friday was 177.78. So look at this figure up here. C stands for close, 177.78. And over the weekend, we were speaking about, if I zoom out and show you this, how we were getting very close to the apex of this symmetrical triangle. Now, in terms of time frame of this particular pattern, we are really stretching the analysis. However, you can see price is respecting that support level of the upward trend, which gives us the support of the symmetrical triangle. And it is also respecting the downward resistance area through those consecutive series of lower highs. So although the pattern, all right, the structural pattern, the setup really began late 2014, if not the beginning of 2015, we're still working with it and we're being a little bit flexible in our analysis. The best thing, or at least what we could draw away from this pattern, was that we were in the apex, we were very close to the apex, and we had a neutral trade set up, or at least we were monitoring the possibility for a very neutral trade. We had a 163 bearish entry, and we had a 184 bullish entry. And over the weekend, I was suggesting that we should give it a couple of days just to see what happens up and around this resistance area. If we can get above around 178, which is what we failed to do on Friday, we should have, or at least there was a high possibility that we would have just congested around 181, 182 before ultimately breaking out above 184. As you can see, it just went parabolic during Tuesday's trading session and I missed out on it. I didn't have the trigger open. I wasn't expecting it. And again, that isn't bad analysis. That isn't, it is technically a missed opportunity, but for the right reasons. And you can't pick them all. You can't have them all. You can't have... you can't capture every single winning trade or every big momentum move which sort of happens on every stock in our top 12 individual trade list. We can expect the move. We can have reasons why we may not have a contingent order open in our accounts, and I spoke through that on Bidu. However, to put this in perspective, I'm very grateful for the move which is eventuated on Amazon. And although I am slightly disappointed for not having this open trigger in my account for first thing Tuesday on Bidu, it is what it is. And it isn't, it's a missed opportunity technically, but I know for the right reasons, I didn't have that contingent order in my own account. And sometimes that is the way of trading, okay? That is the way of trading. So you just have to accept it. But the best thing I can say to you right now is just to be grateful for the move which we have seen on Amazon, which has really paid us off quite significantly if you're still in that Amazon trade. A little bit sketchy. We do have a lot of bearish or at least negative points of divergence setting up. However, the trend just continues and it just simply doesn't want to reverse. And until it gives us, again, those definitive signals that it has reversed, we have to trade in the direction of this Amazon trend. For a lot of, I guess, other individual stocks right now, at least, you need to be or at least remain neutral. And the reason I say that is because if you're a technical swing trader and you want to hold stocks for a number of days up to a number of weeks, well, you really want to see these markets either confirm above the breaks of these swing highs or break below the neckline to confirm retracement types of trades. And simply, right now on the Dow, also on the S&P, and also to a degree on the NASDAQ, we simply don't have that confirmation. So if you're looking at entering into aggressive new trades, and this sort of falls into that Bidu trade because, again, we're a little bit suspect on this move until it definitively breaks above those resistant swing highs. I understand if you want to sort of refrain or at least pull back from aggressive market entries on individual stocks. I understand, especially given that we have a shortened trading week, which generally coincides with lower volume, which can add to sort of whipsaws or at least increased volatility, something which we haven't seen for a number of weeks. So there are, of course, valid reasons as to why you may not be, again, aggressively following trades or trying to jump into trades, and I respect that. It actually makes a lot of sense, and it makes a lot of sense until the market, again, tells us, or at least it explains to us through price direction, which way it is going to move in the intermediate time frame, which is very, very important. So I hope you've learned something from that. But again, a huge shock to me. Amazon, a massive move to the upside. Intrinsic value into those call options makes us very happy. Bidu, however, we saw the move coming, but personally, all right, I missed out on it. I know people, that shouldn't be a smiley face to me. It should be a little bit of a frown. I know people who got into it. I've already received a lot of emails. And again, I know a lot of people missed out on it through my explanation, my own personal analysis over the weekend. So, I mean, you can't pick them all. But it is great if you have the discipline to not place a trade, even if you look back on that trade and it would have worked out, as long as you are true to the rules, all right, and a common understanding and to experience, well, then you're trading correctly, all right? So on that note, everybody, I'm going to sign off on this Tuesday afternoon market and individual stock recap, 2 individual stocks, Bidu and Amazon. The FANG stocks have done relatively well. Netflix, for instance, saw a nice little break above that little resistance area, which we've been eyeing off. I'm not in Netflix at all. Apple was probably the weakest. It did close down roughly 5 cents. Outside of that, we've got Google, which was a positive day. However, it is still yet to break above this swing high. So we'll see what tech does. At the moment, though, we've got some really nice candlesticks on a number of tech companies. We'll just see whether or not it's valid, whether we can push above respective swing highs on a lot of those individual stocks and also the market moving forward. Have a fantastic evening. I'll be back with you. Let me think this through. Maybe later in the week, I will definitely be with you if we see these markets break out. But if they do just tread water and move sideways and they are relatively unchanged for the week, I'll be back with you over the weekend in that pro analysis class. All the best traders and friends right around the world. It's James signing off on behalf of Pivot Point Trading. Goodbye.